So, I mean, for most people, it takes, 2 years. I know people who weren't successful until 4 or 5 years. You just have to understand where you are along the process. So, you could be struggling at 3 or 5 months, but understand that you're on the right path.
Hello, everybody. This is Anthony for Investors Underground. Today, I have the opportunity to speak with one of the outstanding members and moderator within the Investors Underground community. IU members will recognize him as Divided Champ, who shares helpful trading insights daily, from key levels on hot stocks to breaking news and providing analysis on trades, catalysts, and news events. It's my pleasure to welcome Judah Esses. Hello, Judah. Thank you for being here and taking the time to speak with me today.
Yeah, thank you for having me on, Anthony.
Judah, if it's okay with you, I'd love to start closer to the beginning of your trading journey. So, when did you first get interested in the stock market and trading?
So, this was around the March 2020 lows, and I had no plan or desire to get involved in the market. I mean, it was everything people were talking about. It was all around me. And somehow one day I opened up a Twitter account and I just started following hundreds of people on Twitter. They spoke about stocks, I followed them, I had alerts on for them, and I would just jump into any trade that they would tweet about. And there was really no rules at the time. I didn't have any plans, any goals. Everything was done off my phone. I had I had no computer, I had no PC, no monitors, nothing. This was like done at home in bed during COVID times. And I mean, it was just really very random and very unplanned. And I really don't remember back at that time why I got involved, but I mean, I'm glad I did.
So, what were some of the first lessons that you learned in trading during this time when you just started?
The lessons that I learned when I just started, I mean, there weren't many. It was just, you buy anything they tweet about, go to bed, wake up, and this is like, you know, 200, 300% higher. It all started when things started going down and I started to lose money and I would wake up and things would gap down. And that's when I realized that, this is probably not going to work following all these people on Twitter. And I mean, that's when I came across Nathan Michaud, which is, where I'm a moderator at now.
Awesome. Yeah, and you're doing excellent work in the chat, always providing helpful insights, breaking news, price levels, things like that, which is much appreciated for everybody else who are members in the chat. As for your learning more about trading, what resources were most helpful for you? I know you mentioned, Nate. What were some of the resources that you used to learn more about the stock market and what trading is and becoming more sufficient, self sufficient in your trading?
Yes, when I started losing money and when I got introduced to Nate, I would read through his tweets and I would see basically when I was following these other guys, they would just tweet something out, say this thing's going to the moon, put an emoji, and there was no real explanation over why it was going to do what it would do. But seeing what Nate would tweet, it would be like this thing's going to zero, and he gave like 5 to 10 reasons why. So his tweets were like just very, very, very description based, and it was like just informative, a lot more informative than I was getting before. So I followed, his links and I ended up at IU and immediately I bought the full $2,700 1 year long membership along with this textbook in Tandem Trader. And I would just go through that, you know, at least, I mean, I went through that multiple times. Every night I would go through it, spend the hours going through it until I memorized almost all of it. I still hear that Australian voice in my mind, but I mean, that's really what, pushed me to the next level. And that's when things got serious, was when I went through those videos and then I saw it on real time.
And so, is it safe to say that there were certain habits that you had to unlearn from when you started trading to when you started going through the DVDs?
So I still had that habit when I started out after watching the DVDs and after moving away from Twitter. And that was the habit of chasing because I was always, involved in the news and I was always on top of the news. And I mean, at the time of COVID and even a little bit after that, things moved on news. News came out and this thing would just rocket hundreds of percent. And that was something that, was still happening after I had dropped the Twitter accounts. So that was something that I eventually had to unlearn. And it's funny because you hear the word chase a lot, right? Like you're chasing this stock, he's chasing, don't chase. And it's like chasing is a term you use when you miss something, like you're waiting for the bus, you get on the bus, you made the bus, and now you're on your way. You're going to get to work on time. But if one morning you're late and you end up chasing the bus, that means you missed the bus. And you don't want to miss the bus. You don't want to be chasing. You don't want to be caught chasing. And that's something that I really had to unlearn because there's no risk management in chasing. If you chase something and have no plans, especially when you're day trading, these things move 20% within minutes. And if you don't have a plan, if you're chasing, you're just not going to make it.
And so I wanted to talk a little bit about your trading style and what type of style you eventually found to be most comfortable with. So can you talk a little bit about when you started to find consistency in your trading after just chasing these random stocks that you saw on Twitter?
Yeah. So a little bit, after constantly like giving back on these chases and these very fast moving small caps and doing a little bit more research, I came across Kulamagi. Sure, most of you are familiar with him, Christian Kulamagi. He spoke, a few weeks ago at Traders for a Cause. Very well-known trader, very successful trader. And I went through almost all of his material hundreds of times over. His website, his YouTube videos, other people's YouTube videos, his tweets, setups. And I came to realize more that these stocks, they have a much bigger, they have more potential. They have much more potential than just a 1 day move. Generally you see that day traders target big moves and stocks with big moves and big volume. And it's like there's a reason there's big volume on that stock. And it's like if you zoom out a little bit and you just look at the bigger picture, there's a lot more to it than just that 1 day move and that, focused in view. And a lot of these stocks, like it's a difference between, like a 2-to-1 risk reward or a 3-to-1 risk reward and like a 10 or 20-to-1 risk reward. Especially back during COVID time, these things were just multiplying and it would just like outweigh the risk. It was just pretty obvious.
Yeah, and Christian's definitely one of the better people that you can use as inspiration. And his talk at Traders for a Cause 2023 was absolutely phenomenal. And I highly recommend everybody go to Project Impact and, if you can, donate and check in on Christian's presentation. That was one of the better ones of the weekend. And so for you, Judah, do you find that, like Christian, the swing trades are the types of setups that you're looking for and you feel most comfortable with now? And do you ever just trade intraday?
Yeah, so I find that swing trading is a lot more easier for my eye to catch. But there are also times where I will take day trades, and those are stocks that, they're either day one moves that have no daily chart set up there. And generally, I mean, you could say that that's an EP, but these like $1, $2, $3 micro cap and small cap stocks, there's not much to them, and there's generally not much to them afterwards. So things like that, is something that I may want to trade on day one, especially day three or day four, those liquidity trap T+2 setups. There's no daily chart there, but there is opportunity and there is, a small moment of opportunity for a squeeze. And like that's not something that you would want to swing trade, but it's obvious sometimes as things hold up and shorts need to cover. And that's just there's no daily setup there for me to hold on to. And there's also the mean reversion type setups, which are also broken daily charts that may provide, a small window of opportunity to take. Mostly these setups at the end of the day don't have a daily chart behind them. So it's just these like and it's very rare, but it's just stocks that have a good trend intraday for whatever reason it is, but there's no daily chart and it's not an EP for whatever reason.
And do you think there are any additional benefits to swing trading compared to purely intraday trading? Do you think maybe for beginners, swing trading is better, or would you recommend that they stick to intraday?
I think there's a probably much faster learning curve if you would day trade. I do find, however, that over the long term, if you want to grow a really big account, then swing trading is the only way to do it. And I mean, there's a lot of positives on why you would want to swing trade over day trade. Swing trading, I mean, it's a lot slower. You have a lot more time to think. You have a lot more time to, look at your risk and reward and evaluate a setup properly and, determine whether or not you really want to take this setup. If you think about it, the daily chart is just an intraday chart. And instead of the 1 minute candles, they're daily candles. So whatever you look for intraday, you have days to look for on the daily chart. And I mean, we all talk about trading being so free, and we talk about freedom, not having to work for a boss, not having to go to the city, and not having to, it's time consuming, and it's just the freedom about trading, doing what you want to do. But once you start day trading, your eyes are glued to that screen, and there is no freedom throughout the day. Like there was times where I was trading pre-market, and I really didn't want to trade pre-market, and it was a stock that started moving at 7:30 a.m. and I was sitting there 7:30 a.m. and I missed out on other trades because my eyes were glued to that chart instead of like seeing what else was moving pre-market. And on top of that, I mean, even if this thing were to do something, which a lot of times it doesn't, it just sits there and goes sideways all day. I mean, even if it does something and you're out, you're always looking for another area to get back in. So like although you're out of it, you're still glued to it. Like some people get married to those stocks for the day or whatever it is, and you're still sitting there just watching it, even though you're not in it, you're waiting for another opportunity to get in and take that trade. And I just think that, it's not worth the moves that you get out of them. A lot of the times these things go a lot further with a lot less effort.
That's a great point. And I know that you mentioned, daily charts. So do you tend to focus mostly on technical analysis to make your decisions, or do you ever dig into some of the fundamentals of a company that you're about to trade?
It's really all technical. I mean, I do annotate on my charts any news or any earnings that do come out. And I mean, it's a much more powerful move if news comes out while the stock moves through a pivot or a breakout, but it's not really necessary. I mean, I don't really care exactly what the news was. I just care that there is news. But at the same time, I'm trading setups that don't have news. Either news comes on afterwards or it's been out for a week or two and it's something that builds.
Okay. And what's your perspective on risk management in trading? And how do you approach risk management in order to keep yourself in check and not have too big of losses?
Yeah, so generally I don't want to risk more than 20% of my account in a single trade. When the market's doing really well, that may go down to 10%. And then within that trade, I don't want to be losing more than 1% of the entire account. So let's say I did put in 20% of my account into a single trade, 5% would be my max loss. And all this is pretty much based off how far my entry is from low of day, because that's generally where my stop loss is. And I could show you later, but I have this little indicator on my charts that show me what my max odds should be based on that calculation of, 1% account max loss.
And how can traders mitigate risk? What practical steps can traders take in order to help them with their risk management if they're having issues in that area?
So I think if they're having issues, I mean, it's good to look at, where you're taking that setup and how far it's already gone. This is on the long side. You don't want to be taking breakouts if something is already up 5, 10, 15%. You want it to be very tight among the break, like you want it to be very tight close to the breakout level. But you want to be buying dips if that's the type of trader you are. It's less of taking, breakouts on big moves prior to the breakout. And I mean, risk management is all about size and it's all about, I guess, where you take a trade.
How many stocks are you trading at any given time? Are you building sort of a basket of stocks, kind of like a portfolio, or are you trading maybe one or two unrelated stocks based on the setup?
Overall, I mean, you don't want more than 10 stocks in your portfolio unless you have like a massive portfolio and you're able to keep track of all these, it could go down to five. That means you're having 20 stocks in your portfolio. You don't have a big account there. I mean, it's not going to build as much. So for me, I think 5 to 10 stocks is my max. And I mean, generally, I try to take the best out of the basket. I know, like, as a whole, like, if all of crypto is moving, all of crypto stocks should be moving. But I try to, like, take out, the fastest moving ones or the ones with the best setups because ultimately there's other setups than just those. And I don't want to be locked in to all of crypto because if it doesn't work out, it's going to be a bad loss. So I take a few stocks from crypto and it's a few stocks from EV if that's the sector that's going, but it's generally just like the strongest looking stocks within that sector. And I try not to go too deep into that sector. I try not to get too, overly bullish and overly excited about it. I just take it as any other trade, as any other setup. I mean, it's the same thing with the news. The theme is helping the stocks, but ultimately it's just a reason to take a stock. So if, you know, the news comes out, I don't really care what the news says. If the stock's acting positively to it and it's a positive headline, I'm interested.
Judah, I wanted to ask about your charting and technical analysis. So, in general, what's your perspective on technical analysis and how you use it to trade and profit in the markets? I know you had mentioned earlier that you're looking at more of a swing trading approach and looking at the daily candles rather than just the maybe minute candles on an intraday basis. So, what are you looking for? What type of indicators are you looking at on the daily chart in order to help you make trading decisions?
Yeah, so really all I'm looking for is any type of consolidation, whether it's a flag or a channel, and then I'm seeing how it breaks out through that level. Hopefully, it's on good volume and hopefully there's a good catalyst or earnings out there and it's either that or it's either a big gap up on news or catalyst.
Are there any particular indicators that are helpful for you that you keep on your charts? And I know maybe later we can talk about this in depth, but is there anything just real quick in terms of indicators that you would want to mention as being really helpful?
Yeah, so I use moving averages, and I know a lot of people may use moving averages differently. They could be used to determine which way stock is trending. Usually, if the 10-day is over the 20 and the 20 is over the 50 and so on, and they're all trending upward and sloping upward, the stock is in an uptrend, and vice versa. If the 10 is below the 20 and the 20 is below the 50 and they're sloping downward, and the price is below it all, then it's in a downtrend. And generally, as they go to retest, they'll either bounce off or fail, and they act as support as resistance lines. Usually, you want to see a stock over all those moving averages, or if a stock is gapping up, you want to see a gap up over all those moving averages. Sometimes I'll take stocks that are below the moving averages if the setup looks really good. And I personally use the moving averages just to keep me in a real good moving stock. Like, for example, I mean, GME back in 2021, January, if you're trading that and you're swing trading that and like you don't really have a plan of when to sell it, the moving average could be a good way to keep yourself in that stock and pretty much use it as a stop loss if it closes or breaks below whichever moving average you choose. But the 10-day is usually what I choose. If it breaks below the 10-day, I'm usually out of that trade.
Judah, how can a catalyst impact a technical setup? Are there ever times where a negative catalyst can ruin a good looking chart? Or on the flip side, times where a really positive catalyst can give new life to an otherwise downtrending chart that looks like it's down in the dumps?
I'll show some examples afterwards, but I mean, there definitely are times where a catalyst can change the direction of a good looking trend, either to the downside or upside. I mean, usually it's through biotech. If a stock looks really good and they announce bad results, that stock could go from a great looking trend to a horrific stock that you would never take, until it recovers. And I mean, vice versa. There are times where stocks are fading, and I see this a lot. Earnings comes out, or news has to be really positive. Mostly, I see this off, positive earnings or positive results on biotech. But generally, it's that gap up on massive volume and news, and that's typically what changes a trend is news. So, for example, IMUX, we have a nice gap here on well than above average volume. It gaps up on news over prior resistance, pretty much closing this gap from June. And I mean, this thing continues on to double. And, on this day here, you're thinking like, okay, maybe, it could go sideways for another few weeks or a month set up and have another like higher. Then one morning you get this press release on biotech results and the stock gaps down 80%.
What are some mistakes that you think that newer or less experienced traders make when it comes to technical analysis and using it to make informed trading decisions?
So I think many hold on for too long. I think they believe that once the stock breaks out, it has to continue going, and they don't properly come in with a good risk reward plan. It hits the alert, they buy it, no matter how much it's been up, no matter where it's coming from or how the actual chart looks. I mean, they just get in, they hope for the best, and they don't really look at, what the stock has done in the past and where it may find trouble. And I think that, many traders just believe that these things are going to work just because it hit an alert.
Judah, would it be possible to review a couple trades or charts to get your analysis and your perception of trades and technical analysis?
Yeah, I could share my screen. All right, so this is my setup. This is what I look at every day. I could go over all this later and what everything means to me and how I show up to the markets and how I keep in touch with the markets. But I just want to go over a few setups. These over here are the setups that I want to review. They are my positions. They're just here for the sake of the video. And I wanted to start off with Coinbase because of like the massive move that it has made this past few weeks since ER. And I mean, this chart has been on radar since this day here. I had it on radar at the time. Bitcoin was looking really well. It was looking good for a breakout. And once Coinbase announced earnings on this day here and it gapped up over this level, I wrote an IU that I think this thing could go to 114. And how I got to 114 was pretty much off this bigger level here. If you zoom out, go to the weekly, you could see how big this 114, 113.50 level is for the stock. So that's how I got to the exact level of 114 and how I got to that move from where we were, which is in the low 80s, was pretty much based off what it's done in the past and how the stock moves. You could see based on the history that the stock has pretty clean big moves as it breaks out of these these little pivot areas. And I mean, here we are. If this thing on this day here, as it was breaking 114, I actually noted that if we, build above 114, we could see 150, 200. Like this thing has been in a what year and a half long base. We're finally breaking out. And if you look, you could see these levels. I mean, not much resistance until these areas here. So this is something, that we had on watch from down here. And this is why I think using moving averages is a great way, to use as a stop loss, is because you'd still be in this if you had taken it on the earnings day. Another great setup that I just want to point out is back here. And this is basically combining the two news and breaking out of a trend line. We have this long base after this big move, and they have this, this news announcement, and whether or not it's big, it doesn't really matter. It broke through my trend line, it hit alerts, it had news, and this thing has just gone straight up since. Tesla is another one. This hit alerts today. And I mean, if you look how tight this thing has gotten on this daily, this is pretty much what I look for. There's not much momentum here. More momentum is back during COVID times, but like this is still trading within a range. Like if you look at it, there's not much momentum. They do have these little pocket pivots and these little potential setups that you still can trade, and I do trade. This hit alert here as it broke out at like 237. I believe it's here, 237.62. What you do is you take it as it breaks the high of day using the low of day as a stop loss. And this happened to stop out, but then you see how this reclaims green, reclaims VWAP, and that's why it's important to reset those alerts, because it re-hit alerts, which I set a little bit higher, but those hit alerts, and I mean this move alone, has been pretty decent. If you look at it, I mean this setup here kind of looked like Coinbase in the other example. You have that move, you have this channel, you have a little breakout through it. But if you see, like, this kind of also moves the way Coinbase does. I mean, you have a move, you have this channel and breakout. And if you look at it at a bigger picture, you could see that what's going on here is pretty much what was going on here on a bigger scale. So you have this big move, you have this channel, this breakout, big move, channel. Like, I mean, I thought we were going to test this level earlier, but I think that we do continue to move up and test like 250 to 252.
Mm-hmm.
If it does break out, I think this thing could go a lot higher to 270s, 300. So this is something that you could trade it intraday, but I mean there's so much more potential if you just get in and ride these things up. As long as you have your risk. I mean, like, what is there to be afraid of? I know a lot of people don't like to swing trade because they're afraid or because they think that they could rotate their money faster. But this could be 10% of your account. You still have 90% of your account to trade elsewhere. You let this thing work for you. You don't have to worry as much, as sitting in a trade for 10% or a potential 30% loss. Netflix, I mean, this is a slow moving stock. I mean, nobody should really be taking this. The ADR is 1.6. Usually you don't want to trade anything under 4 or 5 unless you have a really massive account. But this at the time was just something that was pretty relatively strong given the market. Like the market was, I think, on this day here. And Netflix was putting in this range, and this is what we talked about before of a pretty bad setup that gets revived by catalyst or news. This over here doesn't look too great. But then earnings come out, this thing gaps up, puts in this nice little range here, and then we gap up through this trend line on news. And whether this news matters or not, I don't know, but this was something that hit alert, something that was on radar from one of these days here. But I mean, we were prepared for this. And I mean, it's been straight up since. Roblox was another that was on watch at the same time. Those three were put in the same like kind of watch list basket. This was a little more difficult because we had earnings on this day. So whether or not you hold into earnings, I personally don't like to unless there's good cushion. But I mean, this was another one that just looked really good. Like it's gone from 25 to 32. It's consolidated. It's gone very tight. It started piercing alerts here, and then we had this gap up. Small move, but I mean, this is typically what I'm looking for. And if you zoom out, this thing has been in what in a almost a 2 year base. So I mean, a big level to look out for is the 44s, 45 level. I think if we break that, whether it's on earnings or big news, I mean, there's no reason this thing can't go back to 60s, 70s. I mean, look at this base it's been putting in. So this is something that I have on watch, and this is how I look at charts, especially for a bigger picture trade.
Judah, can you explain some of the lines and the charts that we're seeing here, some of the moving averages?
So I don't use these moving averages too much. My primary use for them is to stop out of a trade. Typically, if I'm taking a trade, I sell partial position after 3 to 5 days, and then I'll trade the rest along the moving average. So if I took this trade here, I would sell, either a half or a third of my position after 3 to 5 days, and then I would sell on the close below the 10-day moving average. And sometimes it could be the 20. Depends how close they are to each other and how it's respected the moving averages in the past. But that's how I use them. It's just to stop out of a trade. This technique I also learned from Kulamagi, buying, opening range break, using low of day as a stop, selling after a couple of days and using a moving average to stop out. Like that whole risk management, that whole technique is all through Kulamagi, and I mean it works.
Judah, what do you decide to write in? I see some of these annotations. Are these particular catalysts that have an impact on the stock or could have an impact on the stock?
Yeah, so typically whenever there's news, I'll put it on the chart this way. I know what it's done in the past. If I'm pulling up a chart, I want to see how it moved and why it moved, whether it was news that moved it or press release versus, earnings or biotech results. I want to see, what the reason was for that move. And really just the fact that there was news and drawing these trend lines, it's basically just off like these consolidated areas and where like the stock has had the most trouble. So as you can see, obviously, the stock has had trouble here. This is a clear resistance point. And when this, stock announced news, it gaps up over that resistance point. So between having the news, the volume gapping up over trend line, this is something that I wanted to keep an eye on.
Judah, how do you stay organized with all the different setups that might be moving in the market?
In the morning during pre-market, I'll go through this extended hours watch list that I have. It's a dynamic watch list, which pretty much just, has anything that is gapping up 7% and anything that has over a million volume traded. I'll go through it. I'll see, which stocks are gapping up, how the daily looks, if it's worth keeping on radar, if it's worth, totally ignoring. And I'll go to see why those things are moving and I'll add them in to the charts and annotate them. Those all get moved to this today, which is pretty much stocks that have been moving in pre-market and things to keep an eye on for like day one moves, whether it's an episodic pivot or, just to see like why certain things are moving on day one. Then throughout the day, I'm going through all these other scanners that I have here. A lot of them were taken from Kulamagi. Some of them were taken from StockBeast. Some were on Twitter. Some were, edited to my standards and my likings. But I basically go through these, and throughout the day, I'm constantly just scanning through these. I mean, you see how easy it is to go through like all these names, and over time, you acquire an eye for charts and like how things can move based on how it looks.
Judah, how often do you go through this process? Is this all just in the pre-market? And do you do any similar type of work at the end of the day when the market's closed and we're in after hours session?
Yeah, so this scanning is all done throughout the day. If I see something that I like, if it's set up and ready to go, I'll move that onto my watch list, which is pretty much setups that I think are near, a move, or I'll move them into one of these watch lists. The flag watch list is pretty much small priced or low priced names that have made like these big moves for whatever reason. These are things I like to keep an eye on. There's also my favorites, which is, larger cap names and higher price stocks that have either broken out or setting up, whatever it may be. And then at the end of the day, I'll go back to the extended hours and I'll see what stocks are moving after hours. And I'll pretty much just take these out. I'll put these to where they need to go. I'll clear it and then I'll replace them with stocks that are moving after hours. So I'm prepared for the morning. And I'll basically stack up today after hours movers and then tomorrow morning's movers. And then before market open, I'll filter it out to whatever's holding up and whatever's important. To scan through stocks that, may be setting up in general, I'll go through these watch lists, which is pretty much the biggest 1 month gainers, 3 month gainers, 6 months gainers. And I'll just continuously go through these and see, if there's anything setting up. And I'll do the same. I'll put them either in the watch list or I'll just store them to look for later.
And Judah, since we were looking at charts, is it possible for the same chart to be beneficial for both intraday traders and swing traders as well?
Yeah, definitely. I mean, as a swing trader, you would want to see something that's getting very tight, breaking out of that range. And that's pretty much what we're looking for, how it's traded in the past, how does it usually move? Is it a clean trend? Is it a choppy chart? And that's what swing traders usually get out of it. How much overhead resistance there is, but the a different angle can be viewed from an intraday trader as well. Like as an intraday trader, you want to see, does the stock usually get sold off on day one? Like VS recently, that stock is always getting sold day one. And Envos used to be the same. And what you want to pretty much see in that case is a build over a few days. And then, you take the breakout. But what you want to see is like how that stock has moved in the past. And you also want to use the daily to find key resistance and support levels. For swing trading, I mean, you just buy it and you write it up along moving average and you sell once it closes below the moving average. For for intraday trading, at least for me, I don't plan to swing that. I'm looking at the daily chart, seeing where resistance is, and that's where I start to sell some. So as a swing trader, you want to just see how the overall big picture looks. And as an intraday trader, you want to look at the daily chart to get an idea where a stock can potentially go and where it may have trouble.
Judah, if someone doesn't have TC2000, how would they be able to replicate some of the work that you're doing in order to stay organized and track stocks?
So I think there's definitely a need for some sort of software, whether it's TC2000, Think or Swim, Trading View. There needs to be something. You can't be trading off your phone like I did back in 2020. I mean, if you want to really grow as a trader, you need a charting software. You need to be organized. You need to place everything, in the right areas for your eyes to see. And you need to be there.
How long did it take you in terms of months or even years to really refine your process for reviewing in the pre-market and for after hours to a point where it was helpful for you and it became personalized?
Yeah, I mean, initially all this stemmed from, between Nate and Kulamagi, nothing really was on my own. And Kulamagi says like, just take what you could get from other people. And I think that's fine as long as, you build on top of that and eventually you're able to go out on your own. You can't follow anybody forever, but you could definitely take some things from them. And that's what I did. I initially, got all of my setup ideas and everything from Kulamagi. And then just over time, as you show up and as you progress throughout the day, you realize that certain things aren't where they should be, or I mean, everything's tailored to you. Only you know that. And it's just something that will come with time. I mean, as long as you show up to the market, you'll understand what needs to be refined and why it would need to be refined. But everyone's different.
In addition to TC2000, are there any other pieces of software or resources that are beneficial for you when you're analyzing stocks or keeping up to date with new catalysts and news events?
Yeah, so the only other two items I use would be Benzinga, which is for my news, and IU, which is for my community. I mean, IU, it's a great community. I've been there since I started trading, and the moderators are awesome. The traders are awesome. Nate is awesome. We get good information out of there. We're very quick on news thanks to T530 and Tex-Mex, Scott, all the other, moderators out there. I mean, honestly, I can't see myself anywhere else.
If you're looking to expand your trading network or simply take your trading to the next level, Investors Underground might be able to help. You'll have access to courses and mentors to learn from, some of the best technology available for scanning stocks and breaking news, and access to the chat rooms where you'll find a vibrant community of focused traders just like Judah who share trade ideas in real time every single day. You'll also have access to the updated morning broadcast where IU community members, including Nate, share their thoughts on tickers for the day ahead during the pre-market session. You'll have access to the midweek study session with Sam, webinars, moderator watch lists, and all the other resources that Investors Underground has to offer. Listeners of the podcast can access special deals at investorsunderground.com/YouTube. And now, back to our interview with Judah. Judah, if it's okay with you, I'd love to go through a lightning round set of questions, just pretty quick questions and pretty quick answers. Is that okay?
Sure.
My first question is, what do you consider to be your greatest strength as a trader?
My greatest strength, I would believe, is, showing up every day and having that drive, no matter what kind of day I've had, no matter what kind of week I've had, whether it's personal, financial, mentally, physically, I'll show up that morning, no matter what kind of night I had the night before, no matter where I am in the world. If I'm traveling, I'll show up and do what needs to be done, whether it's early in the morning or late at night. I'm there, I'm creating setups and watch lists. I'm active in IU. I try to make sure that I keep up with the markets because, once you get lost, it's tough to come back from. And I'd say, putting in that work and that drive is something that has kept me involved in the markets, and it's the reason why I'm here today.
If you could go back to the start of your trading journey and give yourself one piece of advice, what do you think it would be?
I think it would be to kind of be real with yourself. If you're copying another person's style of trading and like you extremely look up to them and they're successful, but you're not doing as well as they are, obviously there's something wrong there. And it's okay to copy other traders, but that's only if it works for you and only if you could build off of it. It's a problem when, 3, 6, 9 months go by and like you're still unsuccessful and you're still running into walls. And, that's when you have to be real to yourself and say, like, listen, this is not working for me. I got to find somebody else with a different strategy. Maybe I should be longing more. Maybe I should be swinging more. And I mean, that's just what I do. But I think it's the easiest, it's the safest. Maybe down the road you can transition, which is a little harder because, it's very different. But if you're not doing well in one area, you should kind of pivot somewhere else.
At what point would you say a person has made it or is successful in trading?
So, I mean, for most people, it takes, 2 years. I know people who weren't successful until 4 or 5 years. You just have to understand where you are along the process. So you could be struggling at 3 or 5 months, but understand that you're on the right path. So everyone's different. Everyone has their own path. Everyone has their own goals. And you have to just, understand where you are. So as long as, you're on that right path, you'll do okay. But I don't think that you should completely give up because you're not doing well after a couple of months. It takes time, takes a lot of work, and you have to find out what works for you. Nothing happens overnight. And if you really want to be successful in this business, you have to show up You have to put things together and you have to understand what is and what isn't working for you.
Are there any areas of your trading that you're still looking to improve on?
Yeah, so I would still love to trade less. I would like to kind of, you know, find out which setups are really the best and, are A plus rather than like try to take these smaller type setups. It's really just about like, finding the best instead of like doing things because I'm bored or because they look okay. I want to take things that I know work and I know the difference between what does and what doesn't work, or what does work and what like works a little less. And I'll still take it just because like there's not much out there and just because I'm trying to, keep up.
Is there anything that you do away from the desk that you believe helps you as a trader?
So two things. One, I've been playing video games since I was a kid. I think that's extremely helpful with, muscle memory, strategy, reaction times, and it's just something that I can't explain, but it's definitely had an impact within my trading. And the second thing would be taking organization from life into the markets and market into life. Everything I do is regimented, sleep, eating, exercise. Like I try to be very clean and, you know, regimen oriented in life because, if you're a mess in life, you're going to be a mess in the markets. If you're a mess in the markets, you'll definitely be a mess in life.
And for those listening who would like to learn more about you or how you trade, how can they do so?
Reach out to me, through IU, Divided Champ, or you could reach out through my Twitter handle, also Divided Champ.
Well, Judah, thank you so much for taking the time to chat with me today. It's been a pleasure, and look forward to seeing you in the chat room in IU tomorrow.
You as well. Thank you, Anthony.
We hope you enjoyed this interview on the Investors Underground podcast. We have more great interviews that we believe you might also like, so don't forget to subscribe. You'll be notified of upcoming releases the moment they become available. Thanks for watching.